So you have to stop and think to yourself, what happens when the music stops? What happens when you make an error? What happens if you're wrong? And what happens if there's a black swan event that's totally outside of your control and it drops itself like a bomb right in the middle of your life and your business? What happens then? A quick market update. We are seeing pricing relax, but still not much trading. A lot of brokers are listing self-storage deals that aren't selling. They're going back to the market. Deals that were listed 6 months ago and didn't sell are coming out of contract. So we're hoping for some relaxation in pricing expectations. And I do think some opportunities are around the corner. A quick side note, if you want to be notified when Bolt Storage is buying again and you're an accredited investor, I welcome you to join my email list, our distribution for LPs. You can go to boltstorage.com/investors to check that out. Let's talk about something that's on my mind often. And this is the urge, the natural urge that strikes real estate investors to do bigger and bigger and bigger deals. It's a tale as old as time. A real estate investor makes their first real taste of money. Maybe they sponsored a deal, or they sold it, or they refinanced something and they made $1 million, maybe more. Maybe their net worth is suddenly $5 or $10 million, and they're still young, energetic, hungry for more. What happens next? And I think before we talk about what happens next and the risks, and you kind of see where I'm going with this, as far as I'm concerned, there are only really 3 levels of wealth in this world. There are 3 different levels of wealth. You can make money and you graduate from tier to tier, and there's only 3 levels, in my opinion, if you simplify it down to the basic human life. Number 1 is a level that you can feed your family and pay all your bills without being stressed. That's number 1. Most people haven't accomplished that. 60% of people are still paycheck to paycheck. So what does that put? 40% of Americans have accomplished the goal of being able to feed their family and pay all their bills without being stressed about money. It sounds silly, but the second level is you can walk into a restaurant and you can order whatever you want without looking at the price. You can go to eat wherever you want. You can go to the grocery store and you can buy whatever food you want, no matter the price, without looking at it, without worrying about it. That's level 2. That's when you have, in my opinion, $500, $1 million in the bank, and you're no longer budgeting on the small things. Level 3 is that you can travel anywhere in the world you want without worrying about the flight or the hotel costs. That's the top tier. It's the upper echelon of wealth. You can travel anywhere you want in the world without worrying about flights or hotel costs. I'm not there yet. Absolutely not. Getting a little bit better about hotel costs and flights and things, but I'm still not flying first class. I'm not comfortable. I'm not at level 3 yet. But beyond that, beyond those 3 levels, I don't think money has an actual impact on the quality of somebody's day-to-day life. They might think it does. They might think that more money will help them be happier and to buy bigger things like the private jet and the yacht, or just do ridiculous things with family and friends. And I don't think it actually does have an impact on your happiness or your quality of life. I think the marginal gain in money does not line up with, especially on a tiered basis, the quality of life and the happiness. So the interesting thing about business and real estate especially is just how common it is for someone to risk it all. To risk it all to make even more money when they already have 2 or 3 of those levels above of wealth covered. The levels of wealth that I just discussed, when they have those covered, it's still extremely common for somebody to risk it all to make even more money. And there's nowhere that this is more common than in real estate. I think any given real estate deal has a 1 to 20% chance of failing, depending on the debt levels, how much debt you put on the property at first. Maybe if you don't use any leverage at all, there's way less chance of it failing. But a deal can still go bad and miss projections and do all those things. So maybe a 20% chance on the low end, but depending on your strategy, on how you are at operating, on your ability and the debt levels of the deal and the structure of the deal, there's a 1 to 20% chance of a deal failing. And then you add on top of that things that are totally outside of your control. Interest rates, a recession, the economy, whatever. Real estate is inherently very risky. So why? Why do badass investors who are very good at what they do get so obsessed with the game, so obsessed with this feeling, so obsessed with the chase that they can't stop pushing all the chips onto the table and risking the house? How is there ever an excuse? And this is kind of a rhetorical question. How is there ever an excuse for someone with tens of millions in net worth to go totally broke doing a deal at the wrong time or with a poor strategy? This is a question that I struggle with all the time because smart people fall into this all the time. And frankly, I need to protect myself from falling into this. This entire episode is a note to me. I'm not lecturing anybody. I'm not acting like I'm better than anybody. This is a note to me. I'm stating facts here that are not very clear and at the front of your mind when you're in the business, in the trenches. When you're doing this stuff, you're in the trenches, you're in the flow, you're operating your company, you're going bigger, you're making hires, you're doing deals. It's hard to separate logic from emotions, to momentum, to opportunity. So I've put a good amount of time thinking about these questions. Why do real estate investors do this? What leads to this? Why does it happen? And I think I figured out a couple parts of the answer. And there's a lot to this, but I think the first part is that this is a very addicting game. It is so easy to get hooked to chasing bigger and bigger deals, just like a music star gets addicted to the spotlight and they spend the rest of their life chasing that high again, and they can't seem to chase it, and they can't find happiness, and they abuse drugs or whatever it might be. Similar story with the gamblers who can't pull themselves away from the poker tables, the sports bettors who ruin their lives betting on sports. There isn't much more fun than putting together complicated deals. There isn't a whole lot in this world that's more fun than lucrative real estate deals and making things happen. Life gets boring, family gets boring, your health gets boring, hobbies get boring. It's really, really hard to replicate the high that one feels in the flow making real estate deals. I'm speaking that from firsthand experience. I think the second thing is that so many people are wired for a constant state of motion. They always have to be moving. They always have to be productive. And entrepreneurship, especially real estate investing, is like hunting. You spend a lot of time laying on a rock waiting for opportunities and a relatively small period of time chasing down the gazelle in the field. I'm going to say that again. Entrepreneurship is a lot like hunting, and real estate is a lot like hunting. Imagine you're a lion. Most of the time, the lions just lay around. They're on a rock. They're hanging out. And then once a week, they have an opportunity to sprint and chase a gazelle in a field. And 2 minutes later, the deed is done. They've killed the animal and they fed their family. They fed their pride. They fed their entire pack of lions for several weeks. So the motion and business is so addicting, and it's so fun to be hiring and building and growing. And what are you going to do next? What are you going to do next? Everybody says, what are you going to do next? It's rare for a high-powered businessman or businesswoman, business person, to feel comfortable waiting out a bad market or just not working very hard or just simply not doing much. Productivity is often some of the only hobbies that these people know, that people like me know. Productivity and getting things done and making money is a serious hobby, and it can be one of the worst addictions of them all. The third thing about all this is that the opportunities get more and more lucrative. As you have more and more success, I think the badasses come out of the woodwork with business proposals. The phone rings more and more, and you get more important people on the other end of the line, and the potential to make even more and more money presents itself. Everybody wants a piece of you. It's all extremely flattering, and it gets really, really hard to say no, especially if you're a type of person like me who got to where he is because he said yes to everything. So if you're the type of person who used to say yes to every opportunity, it's really, really hard to start saying no and saying, oh, all right, there's a chance I could make some money, but guess what? It's not in my wheelhouse. I'm not going to do that. Another one is that you begin to build an exaggerated opinion of yourself and your own abilities. You get cocky. You attribute most of the previous wins to your brilliance and not enough to the market conditions, your team, or just sheer luck. You stop listening to advice as closely. You stop looking for warning signs. You stop looking at the big picture, and you start to develop blind spots. And you lack the humility, frankly. I think one of the big ones, and this is the last one that I'm going to discuss here, is that the ego, the human ego, it has an appetite that's really impossible to quench, to fill. As you get richer and badder and more accomplished, all of your goals and the goalposts keep moving. If you would have told me that I'd be right here at the age of 33 years old, I would have laughed in your face. I would have been happy with this at 65 years old. But yet here I am, and here I am setting bigger and more drastic goals and wanting to do more and more and more. You also meet people who are even richer. You get networked with people who have done more. They have bigger businesses. They make more money. They have nicer cars. And you start thinking about and talking about changing the world and leaving your mark. And you start to make other excuses, and you start to say other things that don't really make any logical sense, but you say it to yourself to continue to justify the growth. And those emotions, that ego is an emotion, and it creates blind spots and it creates overconfidence. So you have to stop and think to yourself, what happens when the music stops? What happens when you make an error? What happens if you're wrong? And what happens if there's a black swan event that's totally outside of your control and it drops itself like a bomb right in the middle of your life and your business? What happens then? Many people say that getting rich and staying rich require two totally different skill sets, and I absolutely agree. Getting rich requires confidence, risk tolerance. It requires constant activity. It requires a certain degree of workaholism. It requires an addiction to progress, and it requires charisma, leadership, and energy. Staying rich often requires no action at all. It requires patience. It requires humility. It requires risk aversion, and it requires the ability to say no. To say no to the greed, to say no to the ego, to say no to the exaggerated opinion of yourself, and to say no to the addicting game, the constant state of motion. I think the folks who stay rich understand that the marginal utility of that extra money from that big deal will not change their life. But the downside, if that deal goes wrong, could drastically impact everything. The folks who stay rich understand that the ego is both a tool and a very dangerous emotion that must be controlled. Few people can be one person at the beginning of their career and another person later, especially if you're building the machine and you're caught in the flow and you're in the rat race of the business that you've created. And it's all about making that next hire, doing that next big deal, taking that next opportunity. It's really hard to step back and recognize the game you're playing. Recognize what the prize is at the end of the tunnel and figuring out if it's really worth the risk to get there. I'm going to say it one more time. This is a note to myself. I am writing this and reading this on this topic and talking to you about this topic right now because it's something that every business person needs to hear, especially me. Juniper Square, the sponsor of this show, recently conducted some research to help you understand what real estate investment managers are doing to build stronger relationships with their investors and earn more referrals to new investors. Their new special report includes data on topics such as what factors are the most important for building investment relationships today, how technology is being used to provide a competitive edge, and the one technology integration that is driving more repeat investors and more referrals. To download this for free, visit junipersquareresearch.com. Again, to get this report for free, visit junipersquareresearch.com. I just wanted to let you know that we have a paid real estate community with over 500 members. Not many people know about this. It's on Facebook. It's an inside look into my business and many other business. It's skewed towards self-storage, but there's also a lot of other commercial real estate investors in the group. We're pinging ideas off of each other. It's just where I share a lot more intimate details about my business than what I share on Twitter or on this podcast. So if you're interested in this and you want to meet other people, there's been people invest in each other's deals on there. There's been people share deals that other people bought. It's a place where a lot of cool stuff is happening. If you're interested in this, visit sweatystartup.com/REC, as in real estate community. sweatystartup.com/REC. There's a free trial as well. You can check it out for a week for $1.